Everyone, you're with Chico, and I'm ready for another week. The Nasdaq was up this morning by a little bit, took a little dip, and it's coming back from that. So, what do we got? Well, Broadcom is continuing its sell-off. I guess a lot of institutions want to roll out of it. It's surprising, all the analysts, all the big analysts, Bank of America, UBS, Wedbush, like about on a handful of 10 of them after the earnings that they had last week, which was a stellar quarter and a strong outlook. They upped their price targets, which I've mentioned in the past, somewhere between, most of them between $450 and $500. Bank of America is like 500. I think that's one of the higher numbers. Anyways, yeah, I was just surprised that they're being, the people want to, institutions want to get out of this stock. If anything, I would think that it would at least go sideways, at around the 400 level before it went into earnings. But it's come down quite a bit, and I would think like a lot of people later on will want to jump back in because there's really no good reason from their earnings release that there's any threat or fear or concern. I know, unlike Oracle, where they couldn't provide definitive numbers for their rollout plan to build those data centers. I think Broadcom's in a different category. Okay, anyways, yeah. Moving on, I found this interesting article. It came across my feed. Yeah, Deloitte CTO saying companies are spending 93% on tech, basically AI, and 7% on people. Yeah, everyone's trying to. This is no surprise, I mean, companies are trying to look for the new thing, how to make more money, and people are expensive and bitchy at times. So yeah, you want to dive into AI, and that's kind of the hot item. So you got to go with the flow, but at the same time, you never know what will happen in the future if there's what they call buyer's remorse and overspending in AI come come back at you. I guess the point in this article is like it's just really lopsided. That's the problem. Even though investing in tech is one thing, but AI specifically, but it's just super lopsided, which I understand it's risky. So in other news, yeah, we got Tesla. Their stock price is up because Musk confirms that their robo-taxi testing is now can be done without somebody sitting in the front seat. So it's lifted up the shares quite a bit today, and I think we'll make a play for that. I think that's a good something that is worthwhile playing. Here we go. And there's some analysts upping their price target here. See, Yahoo has this overlay. Oh, so it's Wedbush. Mr. Eves, the most optimistic analyst for Tesla, has upped their price target to 600. But anyways, it's around almost 480 now. It's in that territory. And then later on this week, we got Micron. They report earnings. So yeah, I expect nothing but a very good quarter for them, and they must be enjoying this cycle where memory prices are very good, so margins are good. They're definitely sold out in memory for AI, the high bandwidth memory, and I would think it's cyclical. That's how memory is, and it's hard to. I'm not an expert at playing these like a memory stocks and follow, getting in and out of at the right times. I sometimes it's frustrating, even though they're doing well, the stock just doesn't reflect that. So I typically don't bother touching it on like for buying, selling. But anyways, yeah, it's I just want to mention that they're releasing earnings this Wednesday. Now, yeah, let's go to over here where our Thinkorswim platform, and yeah, let's sell a option for Tesla, hoping that their exciting news today will only take them so far and that we can make some money off the premium. And they're at the 480 territory. I think we can do 500 for about $4, $4.95. It gets you $5, or you can go a little bit further than that. I think, yeah, being at 480, I think 500 will go for 500. So I'm going to put the order in right now. So sell a single. And it's up to you if you want to do a cover call or a naked call. Naked call, you don't have to worry about the downside, but it's riskier. If it goes into the money, you got to acquire it off the market. Our focus here is basically just to make money off the premium. If for a cover call, we don't count the appreciation, depreciation of the stock for profitability. It's because typically you do a cover call because you have the stock. It's not like you buy the stock just so that you can do a cover call for a short-term play. All right, here we are. We sold it at 410. So okay, yeah. Of course, yeah. The one thing we do for people who are joining the channel, this playlist, selling call options, is that if it does go into the money, then we look at if there's any opportunity costs or you get assignment and have to go acquire the shares, and that would work against us, and that's calculated. Okay, yeah, that's it for today. This is Monday. I hope you have a good start to your week, and we'll see how this goes. Otherwise, we'll see you next episode, okay?